Hey everyone, it's Brady over at American Mortgage Solutions. So I just want to let you know what's going on. I'm starting to get a lot of questions about should I refinance, should I wait? For most of you, you've probably been hearing the news. In the news, rates have hit a what they say is an 8-year low. They're down as low as what they were back in, I'd say 2011, 2013. I don't remember the exact year, but I mean, you're going to see rates. You're going to see people quoting or calling you to refinance. You're going to hear rates down in like the low twos and low threes. Now, you got to be careful. So I get a lot of stuff in the mail, kind of like this right here. You get all these offers in the mail. You're going to start getting more and more, and they're going to be wanting you to encourage you to refinance. So some of the questions I'm getting are should I refinance with who's servicing my loan, my current lender? Um, you get a lot of internet banks calling you, the ones like the Quicken Loans and some of these other companies out there. My suggestion is to call a local professional mortgage broker. They typically are going to get you the best deal. And if you're dealing with somebody local, somebody that you know and that you trust, then typically you don't have to worry about doing the whole bait and switch thing, which can happen if you're dealing with a internet bank or one of the national banks. If you've got any questions while I'm doing this, I want to remind you, if you got some questions, post them over in the comment section, and I'll try to answer those for you while I'm doing this. But a couple of things. So what types of refinances are there? Basically, you've got a rate and term refinance, which is you can take just the balance of your current mortgage and refinance that balance, and you can roll in any costs involved with the refinance. That's called a rate and term. You can also take cash out of your home. So over the last several years, we've had some good appreciation. So most of you are going to have equity in your property. So if you want to get rid of some credit card debt, maybe pay off, you can pay off anything. Or you need some money for a college education for your kids. You want to do some home improvements. That would be taking money out of your house, so that would be a cash out refinance. Maybe you want to pay off a second mortgage that you've got a home equity line of credit that wasn't used to purchase the home. You could pay that off as well, but that's a cash out. The other type, so those are the two main types, is a rate and term and a cash out. But you also, if you're in an FHA loan, you can do a streamline refinance where there's credit qualifying and no credit qualifying. You can do that without even getting an appraisal. And we can do it without income documentation. So if you have an FHA loan, that might be something where we just look at just basically lowering the rate. The other type of refinance we could do would be a rehab. So maybe you want to remodel your home, and if you don't have a lot of equity that you can just pull out and pay somebody to do it, we can actually get bids on what the rehab is going to cost, whether you want to remodel the kitchen, whatever you want to do, put new flooring in. We can get bids on that for you, roll that into the loan, and then you have a contractor do the work once the loan's closed. So there's a lot of different options. A couple things to consider when you're refinancing, this is the other reason to maybe think about refinancing, is to, one, you're going to lower the interest rate, which most of you can probably do that at this point in time. Two, you can shorten the term, so you might want to go from a 30 to a 20, maybe a 25, 15, whatever the case may be. And one thing to remember, if you got a loan 2-3 years ago and you don't want to go all the way back out to a 30, then we can set your term anything we want. We put it at 27 years. It doesn't have to go back to a 30-year fixed. So if you're talking to somebody and you don't feel like you can go to 25, 20, 15, whatever the case may be, because you don't want your payment to go up that much. If it does, going from a 30 to a 15, even though the rate's going to drop, you might still get a small increase in your payment, but you can set it to whatever term you want. Other reasons to refinance, not only to lower the rate, shorten the term, it would be a good time to maybe get rid of mortgage insurance. So if you've been in your loan, maybe you bought your house 2 years ago, and depending on how much you put down to start with, your property could have appreciated enough that we can refinance it not only lower the rate, but drop the mortgage insurance at the same time, which could save you, hundreds of dollars. Mortgage insurance typically, if you've got an average of $150,000, $200,000 loan, that's typically where a lot of the first-time home buyers are going to be at. But you could be paying anywhere from $100 to $200 a month in mortgage insurance, so that would be an additional savings for you. Brian had a question. He asked me a question. So, how long should I wait until I refinance? Well, there's really not any type of waiting period. Brian got his loan, I think, last year, so he doesn't have to wait. You don't have to wait any amount of time. You can pretty much refinance anytime. There are some guidelines with certain loans that might make you wait a certain period of time, but it's usually not more than 6 months. So you can refinance anytime. One of the other questions I got, Spencer asked me, he had a question. So what is the break-even point? How do you figure out what's the break-even point when I refinance? Well, what we do is we run what's called a total cost analysis for you. And if you're going to save, say you're going to save a couple $100 a month on your payment, well, that's about $2,400 a year. It's a lot more sophisticated this, but basically it's $2,400 a year. If it costs you in hard cost $2,400 to refinance it, then your break-even point is 12 months. So if you plan on being in that home more than 12 months, then you're going to start saving $200 a month starting on payment number 13, and then $200 a month from that point forward. So that's kind of a simple way to look at it, but we use a form called a total cost analysis, so we can plug all that information in there, get really detailed for you, show you what it's going to cost, how long it's going to take you to recover that, and then how much you can save going forward. Let's see, what other questions do we have? Okay, somebody said, well, I hear this a lot. So everybody always says I should not refinance unless I can drop my interest rate a full 1 point. That's not true. Again, you just got to look at each individual situation. Some people, it might be a point that makes sense. Others, it might be a half a point. It just depends on what your goals are, your long-term goals, which we're going to ask you, how long do you plan on being in the house? Let's look at where you're at now, see what we can save you, and just see if it makes financial sense. It's just, basically basic math. I already talked about the term. I had a question about that, so we can set the term to anything you want. What kind of paperwork will you need to refinance? Well, again, most of the time we're going to have to get an ID. Now, if you're a client of mine already, we probably have a lot of that if it's been a recent loan that we've done for you. But basically, you got to provide an ID to show who you are, prove your identity. You're going to need a W-2. If you're self-employed and you've been self-employed for a few years, you probably only need one tax return. You're going to need, again, if it's a cash out, we probably wouldn't need any bank statements. In some cases, we might need a couple of months bank statements. But basically, the documentation is going to be fairly minimal. We want a recent mortgage statement from your current mortgage company, and that'd be about it. It's not going to be a whole lot of information that we're going to require. And do you have to bring, another question, do we have to bring money to the closing? In most cases, we can include whatever the cost to refinance is into the loan. We can just roll it in. If you don't want to do that, then you certainly have the option to bring whatever it's going to cost to refinance the loan. You can bring that to the closing and pay it, and then keep your balance at exactly where it's at today. But most people don't do that. Most people will roll it in. It doesn't make much difference in your payment, and sometimes you're better off leaving that cash in your account in case, for your kind of rainy day fund, or in case you have an emergency, then bring that to the closing. Does credit scores matter? Yes, everything's tied to credit scores, but we have lots of programs, and again, that's a situation where we're just going to look at everything and we're going to tell you whether it makes sense to refinance. Here's the other thing. So when you call some of these other people, and a lot of you are probably getting phone calls now. I talked to somebody today who's getting a lot. They said they're getting like a couple calls a week about refinancing, and those people, this is why you need to call a local mortgage broker, somebody that's going to look after your best interest, because there are a lot of people out there that are just going to refinance you because you called and asked to be refinanced. they're going to refinance you. If it doesn't make sense for you to refinance, I'm not going to refinance you. I'll tell you, look, this is why I wouldn't do it right now. It doesn't make sense. And that's what you want from your mortgage professional. Should I do a HELOC, a home equity line of credit, or do a full refinance? Again, that's something that you really need to talk to a professional, have them evaluate the situation. In some cases, it might make more sense to put a line of credit on the house and use that instead of refinancing their loan. Look, if you've already got a 3% rate, why refinance it to pay off debt? Let's just maybe use, you already got a good rate. Maybe we want to use a HELOC. If you're going to be able to pay that off in a fast manner, then you've still got that line of credit setting there for later use. In some cases, it might make more sense financially just to put it all together and put it back into one loan. And let me see here, that's about it. And again, just to recap, if you're getting all this stuff in the mail right now, if you're getting phone calls, I would just beware. For instance, one more thing I want to point out, one of my clients yesterday called me because we had started the refinance process, pulled her credit, and guess what happens? Other people start calling her. That's called trigger leads. Unfortunately, the credit bureau agencies that we pull credit through, they actually turn around and sell that information to a lot of these internet lenders, banks. This is actually a bank that bought this information and started calling my client and basically telling her they could redo the loan at a much, much lower rate, but they couldn't tell her how much it was going to cost her. So beware, if you do start the refinance process, you probably will start getting some phone calls. And I guess that's it. So if you guys found this useful, be sure and share it with your friends. And you're more than welcome to give me a call anytime. I'll be glad to answer any questions you have. You can reach me here at the office, 502-327-9770, or you can call me direct at 502-655-0106. You can also email me at brady@loansolutionsnow.com. Have an awesome day, and you guys be safe. And give me a call if you have any questions. Talk to you soon. Bye.